Okay, let's have a look at rules of trading options. So we'll have a look at rules for shorting options at the moment. So what we need to do is we need to select a far in the money option which is just recently started, right? That is the first thing that we must do. So the price bars would be black in color, and the instrument would have just started. So that is the instrument that we will select for trading. Then we'll have a look at the price bars. So we will wait until the price bars are red in color. So we'll trade only when the price is red in color. Second is the price bar should be below the trend line. So this is the trend line. This is the trend line, and it should be below the trend line, and the color of the bar should be red in color, right? And the price should be as near to the trend line as possible for re-entry. So after we have taken a trade, what we'll do is we'll have a look at how far is the price from this particular trend line, and if it is far off, then we will take only 20% maximum of position. We will re-enter or add up position when the price is near the trend line, so that our risk and reward ratio is much better. Next thing that we will do is we will have a look at this particular indicator. So it should be in overbought region. So when it is in overbought region below the trend line and the colors are red, that's the best point and best risk reward ratio time. So what we'll do here is we will re-enter a little position and average up our position. So when the prices go down, we get a better reward. Next, what we'll do is we'll exit at lower levels and then re-enter back small portion of it, of the trade that we had exited, again in this particular rule. We will exit our complete trade when the color of the price bars change to blue. We will also look to exit all our trades at whatever price we get just 2 to 3 days before the expiry. Now let's have a look at one such instrument that I have selected to show you the demo. So I have selected 8800 PE. The price is below the trend line. The color of the price is black because the instrument has just started. So what we'll do is we'll wait for the color of the price bars to show us a direction. So here it is. I am running it in a fast mode. Here the price bars change color, red in color. We probably might not get an entry here at this particular point. We might get an entry here. So what we should do is we should look at the distance of the price bars from the trend line. It is very high. So what we'll do is we'll enter only probably 10 or 20% of the position here and enter back more the rest of the position, like another 20 to 25 or 30% of the position when it comes near to this particular trend line. I'll speed up a little bit. Now just have a look at this. So the price came a little near to this trend line and the oscillator moved back into the overbought region. So there is a very high chance that it will go down into the oversold region, and when it is going down into the oversold region, it will break the lows of this particular swing or this particular point, and that is exactly what it did. So what we generally do is when the price is at this particular oscillator, we enter another 20% of our trade. So we entered one trade at 370, another at 390, and we wait and we continue until the price bars change its color. Again, a portion of it has gone into the bought region, but we will not enter any more trade here. We will wait for the price to stabilize or go a little higher, because we've already entered at the same price before here at this particular point. Here the price goes higher, but just have a look at this. It tests this particular secondary trend line. Nothing happens and it comes down. And what happens to the oscillator? It goes into the overbought region and leaves the overbought region. This is the point when we enter our next part of our position. So another 20% we add up here at 396, and we do nothing. and this is what happens. Price drops drastically and keeps going down. Now at this stage what we do is we change our from simple bar we change it to smooth bars, right? So the smooth bar will indicate that the price trend is going down continuously. So what we do is we don't exit until the price bar shows an up bar to us. So let's have a look at it when it shows our up bar. Till this moment there is no up bar, it is all down bars, so we continue to hold the position. It is still down bar, and here there we go. So we have an up bar, we have 3 up bars here and continued with 2 down bars and 2 up bars again. So there is high chance that the price will come back to this particular trend line again. So what we do is we had taken 3 positions, 1, 2 and 3. So we exit one position at least, or probably half of the position at this particular point. So your average rate of shorting was 380, now it is at 310. We exit half our position and we will enter back when the price comes back to this particular trend line, near to the trend line, and oscillator goes back above the overbought region. So let's remove our half a position here at this moment, and up bars continue. There you go, it is nearing the trend line, and there it is, it touches the trend line, right? And the price is in the overbought region. So we will, here we got a down bar here, we got a down bar at this particular stage. This is the point when we enter half of our position that we had exited at 210. So we enter back that position at 260 approximately, and we wait. The oscillator is also moved away from the overbought region, and we continue to wait. And the next day it falls badly and comes down to 150, and it keeps going down without up bars. Yeah, you get 3 up bars here. So what we do is we exit another 50% of the position that we had taken up here, and we are in good profit out here right now. We continue with the rest 50% of the position until 2 rules. One is we near the expiry, second is the color of the change of the bars. So we wait till that particular point. So we continue, there it goes all the way down to 120, and there we go, 80, and we are almost near almost at the start of the month, which is so we'll wait for another 15 more days. We've got time still. Here, have a look at this. The price has left the oversold region and nearing the overbought region. So what we'll right now do is we will exit more at this particular point at 90. So at this moment we are almost 200 points. We got 200 points, so that's good enough a number of points. So we should not be very greedy about this particular thing, and we will get a lot of trades. 200 points is good enough. What I would personally do is only keep 20% of the position here, continue from this 90 odd points, and let it go to the expiry 2 to 3 days before the expiry. That is how it is traded. And thank you very much for watching. What I'll do is in the next video I'll show you how to trade call options.